Hi everyone, this is Julius and I'm here to share about my software, Cost Avenger. So this is a newly built software and I'm sharing to everyone under under my AI Traders Launch community. So if you are under my link in FX Primus as our primary broker or our partner broker, so you could actually get this for free. So Cost Avenger is a software based from EMA 200 as its trend identifier, stochastic, and RSI. So later on, I'll discuss more regarding the strategies of the robot also. So before I go further, let me tell you about a bit about myself. So I'm an engineer by profession. I'm an electronics engineer. I've got 6 years experience in the financial industry. So I also have 5 years experience as a software engineer. So that's why I combined my knowledge in trading and software skills. That's why I was able to build I was able to build the software, and I'll be building more softwares in the future also. So I'm also a registered financial planner here in the Philippines. So apart from trading, I also advise personal finance to people, how they manage their money. So I also advise about that also. And yeah, if some of you has not yet like my Facebook page or follow this page, please follow it. It's AI Traders Launch, facebook.com/AI Trader 101. You could just copy and paste it in your browser, so that you could go to the page, or you can simply search that in Facebook. Disclaimer before we go into the details. So trading foreign exchange currencies as well as using trade software is risky, and you should only trade with money you are willing to lose. Results are not guaranteed. This is not a solicitation of investment of any kind. One should learn all the risks associated with trading and software trading before getting involved. This presentation is for informational purposes only. All potential earnings described in this presentation will vary dependent on your work ethic, hours you spend on this project, and quality of customers you refer. So Forex basics. Before I go on with the details of the software, we need to know some Forex basics in order for us to understand the settings of Cost Avenger. So for those who are really new to Forex is simply the buying and selling of currencies in the foreign exchange market. So if you're in the Philippines and you want to go to Hong Kong, let's say you want to exchange your Philippine peso into Hong Kong dollar so that you could use the money when you arrive in Hong Kong, right? So you need to go to a money changer and buy HKD. In return, you also sell your PHP to the money changer. So that's basically how foreign exchange work. But what I'm going to be discussing to you today is online forex trading. So that's simply the process, but we are doing it online. So in trading in forex, you always trade by pair. So for example, if you have euro, how would you know the value of euro if you won't pair it with another pair, right? So you need to pair it with another. So let's say if you have euro, you want to pair it with USD, then you have a pair that we call euro USD. So the currency at your left, or euro, is what we call the base currency. USD is what we call the quote currency. Let's say the price of euro USD is 1.11445, which means that 1 euro is equivalent to 1.11445. Now in Forex, we have what we call pip. So pip is actually the lowest unit wherein you could measure the movement of a certain currency pair. So a pip is a standardized unit, and it is the smallest amount by which a currency quote can change. So for example, if if you hear traders talking about, yeah, the price of Euro USD risen by 1 pip, so that's 1.11445, risen by 1 pip, so that's 1.11455, so that's pip. Now the fifth decimal place is what we call pippets. Now pippets are not really that relevant when you analyze prices in Forex. It's more on the broker side. They added it in order for the broker to be more precise in determining the price of a certain pair. But not all pairs you refer the pip at the fourth decimal place. If you are trading Japanese yen pairs, the pip is identified at the second decimal place. So that's how you identify pip in the foreign exchange market. So another thing that you need to learn is lot size or lot. So what is lot in Forex? Lot represents the size of your trades in Forex. In another interpretation, lot is the number of currency units you will trade in Forex. So we have different types of lot sizes, but what I'm going to be sharing is standard lot, because this is what we're going to be using in this software. So one standard lot is equivalent to the volume of 100,000 units. Whenever you purchase one lot of a currency pair, you buy 100,000 units of the base currency. So the first currency, so the base currency, as you know, is the first currency in a pair. So for instance, buying one lot of Euro USD means you buy 100,000 euro. Another example is that you want to buy a currency pair Euro USD at the exchange rate of 1.5. So 1 euro is equal to 1.5 USD. Then when you buy one lot of this currency pair equal to 100,000 euro, you purchase 150,000, which means 100,000 times 1.5. So the broker also offers you what we call leverage, meaning it lends you some money so that you could buy more, you could purchase more currency at a little price. So if you have a leverage of 1:100, you only pay 1,500 for 100,000 worth of euro. So that's only 1,500 USD. So to open a position. So that's how leverage works. So what is really leverage? Leverage in Forex is the ratio of traders' funds to the size of the broker's credit. In other words, leverage is a borrowed capital to increase the potential returns. The Forex leverage size usually exceeds the invested capital for several times. So for example, if you have 1,000 with a leverage of 1:500, you are in control of 500,000 since the broker lends you 499,000. So 500 is the multiplier, which means that you have a lot of buying power even if you only deposited 1,000 USD to the broker. But does the broker have risk? Actually, you trade by margin. And there's a calculation on it. You could Google it. So when our margin level becomes 150% for the broker that we are using right now, which is FX Primus, when the margin level becomes 150%, the broker have the right to close all the trades, because that is what we call margin call. Why? Because the broker also wants to protect the 499,000 that they lend you. So the moment the $1,000 that you deposit have a margin level of only 150%, which is most likely your 1,000 is about to be wiped out, they have the right to cut the trades. So that's how leverage works. So it's actually a double-edged sword. It could wipe out your account, or with the right trades, it could also give you a lot of gains. So spread. So what is spread? So I know a lot of you have been hearing about spread, especially if you have a friend that is trading already in the foreign exchange. So Forex brokers quote two different prices for a currency pair, the bid and the ask. The bid is the price at which you can sell the base currency. The ask is the price at which you can buy the base currency. So the difference between the two prices is known as the spread. So that is spread. So some brokers, they say that they don't have commission, but actually they charge through spread. So the larger the spread, the higher the gains of the broker. So, but using our software, we are actually using an ECN account. An ECN account is that it has lower spread, but the broker gets a commission per trade. So for me, it's better than just a standard account because at least you know how much the commission the broker will get for every trade, and you know that the spread is really low, and because when the spread is low, your target price or when you put a TP, or what we call take profit, most likely it will hit much faster when the spread is lower. So this is spread. Let's say Euro USD, the bid price is 1.1051 and the ask price is 1.1053. So when you sell euro, you sell it at 1.1051. So, and you get the price of 1.1053. But when you buy euro, you trigger the buy at 1.1053, but you get the price of 1.1051. So spread is measured by pip, so it's the difference between the two. So if 1.1051 is the bid price and the ask price is 1.1053, if you deduct 1.053 and 1.1051, so that's actually 2 pips, because we are referring to the fourth decimal place. So yeah, and before you trade, you must also know how much you will gain in putting a position, and if the market moves by a certain pip, you must also know how much is the gain per pip or the losses per pip. So for example, we buy one lot of Euro USD. A buy order in the foreign exchange market means you are buying euro, you're selling the other pair, or the quote currency. So you're buying euro and you're selling USD. Why do we buy? Why do we put a buy position? Because we think the price of euro will go up. Let's say you think the European economy or the Europe economy is gonna go really high than the US economy. Then you think that the euro in a few days or in a few weeks it will go up. Then you buy euro and you sell USD. So if you put one lot euro USD, it means for every pip movement it could gain 10 USD, or your account could have a drawdown of negative 10 USD. So per pip movement means, so if you bought at a price of 1.11445, it means that if the currency will go up by 1 pip, then your account is gaining by 10 USD. If the currency will go down by 1 pip and you have a buy position, then it means that your account is currently in negative 10 USD drawdown. So that's 1.11435. It's negative 10 USD. So positive 10 and negative 10. So if the current position is still not closed, meaning it's still not deducted to the balance, it's a floating amount, it's paper loss. If it's in negative 10, it is called drawdown. So that's I think some of you, if you've heard some traders talk and they talk about drawdown, that's what is drawdown. So let's say if you have another position and it's a sell, you sell one lot, so meaning you want you want the price to go down because you think euro economy would go down and US economy will go up, then you sell euro and you buy USD. So if the price goes down from 1.11445 to 1.11435, so it got down of 1 pip, so that's positive 10 USD to your account. But if it goes up, that's negative 10 USD to your account, meaning you're in a drawdown of negative 10 USD. So that's drawdown. So I think so that's how foreign exchange work. You just need to identify if the price will go up or down, and you just put a buy or a sell position. So amount per pip movement, every currency, the pip movement is different. So for example, for Euro USD, 10 USD, for USD JPY, 9.12, Euro JPY, 9.12. These are just examples. So if you want to search how to compute this, or there are actually calculators in the internet or tables in the internet where you could see how much is the movement per pip for every currency. Currency pair, I mean. So currencies that we trade, we are trading Euro USD, Euro JPY, USD JPY, and GBP USD. But you can trade other currencies of your choice. It's really up to you. So the cost Avenger strategies, the strategies that we are trading. By the way, the money management for this is that for every 500 USD, you could trade one pair, and the starting lot size would be 0.01. But it is advisable that at least 1K USD, and you could trade 2 to 3 pairs for 1K USD at a 0.01 starting lot size. So cost Avenger strategy. So what is the strategy of the EA? So we don't just want to just let a robot trade our account without knowing how he put some entries, right? So I'm going to be sharing the strategy that I used within the robot. So we have EMA 200. This will serve as your dynamic support and resistance. So EMA 200, yeah, that is a dynamic support and resistance. So if you look at that, if you look at the image here, if the candlesticks are actually the representation of how the market move. For this one, this is a 4 hours chart. So 1 bar is actually the movement of price for every 4 hours of the market. So when the price is below the dynamic support and resistance, or EMA 200, it is actually in a downtrend. So when the price breaks the EMA 200, it is a possible uptrend, but it could go. It is also possible that it could still go down. But basically, the robot identifies the trade through this indicator, EMA 200. Then by the way, I've chosen this because exponential moving average, or EMA 200, it means that it is actually the exponential moving average of the past 200 candlesticks. So some of you are new to Forex, I know, so you could search about EMA 200 candlesticks if you want to learn about this. But it calculates based from the present and the past 200 candles and the current candle. So you average all candles exponentially, and you get dynamic support and resistance. So it is a well respected indicator in terms of support and resistance. That's why I am using this indicator. So RSI, or relative strength index, is actually a way for you to know if the market is overbought or oversold, or the market is because it's actually supply and demand. So if the market is overbought, there are a lot of buyers and less sellers, most likely at the overbought position, the market would retrace. So when the RSI is above 80, it is overbought. When the RSI is below 20, it is oversold. So that's how the robot would analyze it. Then we have the stochastic. Stochastic is just like RSI, but it actually reacts to the price of the market much faster. So when it's above 80, it's overbought. When it's below 20, it's oversold. But we have two lines in the stochastic chart. The stochastic is what you see here below the chart. The stochastic is composed of two lines, the percentage K and percentage D. The percentage K is the green line and the percentage D is the red line. So the percentage D is actually just a simple moving average, three candlestick simple moving average, and the percentage K is the actual stochastic indicator calculation. So I won't go on to the calculation of stochastic. You could Google it, how they calculate it, but you don't have to calculate it, because the moment you use MT4 and you put the indicator there in your MT4, it will the image will automatically appear, and it will just compute the current prices. So what I want to emphasize, that whenever it is oversold and overbought, the robot will look for a crossover. So crossover means that the percentage K crosses over the percentage D. So when that happens, we have a crossover. So meaning during that price, most likely the price would go up or would retrace, or most likely it is at a support level or a resistance level. So during this time, the bot, if it's uptrend and it sees a crossover below 20, the robot will put a buy position. So that's stochastic. So you have two options actually. You wait for the price to be oversold or overbought, or when RSI is above 50 or stochastic is above 50 and it has a crossover, and the trend is sell, then it will sell. So vice versa with buy also. So when you start to use the robot, you could actually see settings there, which is called wait for oversold and overbought. The settings actually is meant for the user to decide, because if you put a yes there, the robot will take a long time for it to trade. So it will not trade directly. It will wait for a crossover at the oversold and overbought position. So you will have really few trades if you put a yes there. But if it's a no, then it will just look at if the current RSI is above 50 or below 50, and it will look at the trend also. So, and it will also check if the stochastic has a crossover above 50 and below 50. So that's how it works. So for people who wants the robot to trade more, set it to no. If you want more better entry, you could set it to yes. But of course, if you set it to yes, it has you will get lower profit, but much lower DD than, or drawdown, than if you set it to no. It's really up to you. So how does the software confirm a buy or a sell? So for this example, let's say EMA 200, the price is above the EMA 200, so it is a confirmed buy, check. And we have the RSI, it's not below 20, so it's not a confirmed buy, so it's X. So when the stochastic is below 20 and a crossover occurred, so it's a check. So during this time, 2 out of the 3 strategies are confirmed, so the robot will now order a buy. So that's how basically it looks at that's how basically the robot confirms a buy or a sell. So we have the cost Avenger settings here. We have the profit profit management type, which is you could choose from trailing weekly goal and fixed weekly goal. I will be explaining it more later. Then we have the fixed weekly goal, trailing start, equity start, trail equity buy. We have the equity protector. Equity protector is the word itself, it protects your equity. So if you set it to 60%, when your account is bleeding by 60%, or it's currently at a negative floating or drawdown of negative 60, it will already cut the trades. That's how equity protector works. So we have also the starting lot size, and starting lot size is the first lot size that the robot will put when it orders a trade. We have also range between levels, or range between trades. So it's later on I'll discuss more about that. Max number of levels is the max number of trades for a certain pair that a robot will take. We have the range multiplier, we have the lot size multiplier, we have the average take profit. So average take profit is if you have like 5 buys, it will get the average price, and the take profit will be situated 30 pips from the average price. Then we have the stop loss per trade. So it's up to you, but most people usually put 200 for the stop loss. You could put it to 0 if you don't want any stop loss. So trend time frame, it's the time frame where the moving average is based. I'll be discussing more about that later. Then we have wait for oversold and overbought, which I explained earlier. And we have the allowable spread in points. I'll be explaining that later also. Then we have trading time management. Trading time management is where we input. This is where we set the robot when to trade and when not to trade. So we have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Usually, I advise that you don't trade Thursday, Friday, and Saturday, because during this time, a lot of market movement, crazy market movements usually happens Thursday, Friday, and Saturday. So don't trade during these times. So next is trend time frame. So trend time frame. So trend time frame, this is the settings that I told you that gets where the EMA 200 is being applied. So trend time frame is where the EMA 200 is applied. So entry time frame is where you attach cost Avenger, RSI, and stock will be confirmed in this time frame. So in trading, actually, it's better to use multiple time frames. So we have the trend time frame where you want to look at the current swing of the market at a higher time frame. So you have higher vision of what the market is currently doing. The entry time frame is like getting a magnifying glass and looking what spot do you really want to put an entry. So you look at the swing, and now you switch to a lower time frame because you want to buy at a oversold price at the H1 time frame. So that's basically one of good strategy that you could use in manual trading also. So our rule in using multiple time frame for analysis is that the trend time frame must be times 4 or times 6 of the entry time frame. So for example, if you are using H1, then your trend time frame could be H4 or H6. But in MT4, we only have H4. So H6 is non-standard time frame. Some websites offer H6 for analysis, but that's H4. So if you are using an entry time frame of H1, then your trend time frame is H4. So if you want to have more orders, so you could attach the robot. So where you attach the robot is is the chosen entry time frame. So if you set the trend time frame to H1, you could, if you divide H1 by 4 or divide it by 6, that's M30 or M15. So you could put your you could attach your robot to M15 and your trend time frame is H1. You could do that. But if you choose H4 and your entry point is M5 or M15, it will really not make sense. So it's better to just follow the rule times 6 or times 4. Times 6 or times 4. So starting lot size, range between trades, range multiplier, and lot size multiplier. These are important settings also. Let me explain this a bit. Example, if your starting lot size is 0.01, your range between trades is 21, your range multiplier is 1.15, and the lot size multiplier is 1.35. So the max level is 10. So let's say the robot puts an entry of 0.01 lot Euro USD at a price of 1.11445, and you set the take profit to 20 pips. So the take profit is 20 pips from 1.11445, which is 1.11645. So not all the time our trades is gonna go our way. There are a lot of times that it will go down. So if we buy, it will go down. If the price goes down by 21 pips and you set your range between trades by 21, so 21 pips from the current price, it will order another buy. So, and the lot size multiplier, this will be applied in the next order, which is 0.01 times 1.35. So that's 0.02. So if you multiply it by the lot size multiplier and it's still 0.01, it will just add another 0.01. So the next order is 0.02 at the price of 21 pips from 1.11445. So that's 1.11235. So the take profit from 1.11645, it will also become 1.11505. So it will lower down also. So the idea is cost averaging. So it will cost average. So from 0.01, it will order another 0.02, so that the take profit will not be that far from the current orders. So if it will continue to go down again, this will be where the range multiplier will be applied. So that's 21 pips times 1.15, your range multiplier. So that's 24 pips. So 24 pips from the current price, or from the current order, that's 1.11235. If it will still go down by 24 pips, then it will order another one, which is 0.03. That's 1.10995. And the lot size multiplier, it will multiply also the previous lot, which is 0.02 times 1.35, that's 0.03. So it will buy 0.03 at a price of 1.10995. And the take profit, instead of 1.11505, it will be lowered down to 1.11350. So this is actually a cost averaging strategy. So as the market goes down and you put a buy, it will cost average so that the take profit will not be as far as the initial order of the buy, or initial order of the robot. So that's how cost averaging work. So if you set the max level to 10, which means this pair can only trade up to 10 positions. That's how it works. Then We have also the level that allow lot size multiplier. So this is actually an option for you to delay the multiplication of lot size, because the bigger the lot size, it's actually the more dangerous for it to your account, especially if the market does not go your way, but the bigger the profit also. So the starting lot size will only start to be multiplied by the lot size multiplier at the specified level. So let's say, for example, the level that allow lot size multiplier is set to 3. So buy 0.01 Euro USD, that's 1.11445. The second is still buy 0.01 Euro USD, 1.11235. The lot size multiplier can now be applied at the third level because you set the level to 3, right? So at the third level, it's 0.02 USD. Now, when I backtested this with USDJPY, which has from January to date, April 2020, which had certain market crash because of the coronavirus, the account actually survived using level that allows size multiplier at 5. So it's really up to you. When you set it higher, you will get lower profits, and it will take longer for your account to hit TP than setting this lower, the level that allow lot size multiplier. But it's really up to you. It's one of the safety feature that I put in the bot. But it's up to you to balance between profit and safety. So allowable spread, this serves as our news filter. So when market actually is very volatile, the spread actually becomes really high. The market is very volatile. So let's say suddenly Trump tweets about trade war and suddenly the market spiked. So during that time, usually the spread really becomes really high. If we set the spread to 20, that's in points. If you look at the screen, that's in points. So that's actually 2 pips. 20 divided by 10. So that's 2 pips. If we set it to 2 pips, if the spread becomes higher than 2 pips, the robot will not trade. So it will detect market volatility. It will detect news because of limiting the spread. So allowable spread will serve as the news filter. When high impact news creates spikes in the market, spread becomes larger, often larger than 2 pips. By limiting Cost Avenger to trade only at a lower spread, we will filter high impact news. Even sudden news that are not scheduled in Forex Factory can now be detected. So there are a lot of softwares that offer news filter, and it refers to the scheduled news that are in the Forex Factory. The disadvantage of it is that if the news is not scheduled, like tweets from presidents or like incidents like bombing or something, so that would greatly affect the economy of a certain country, and it's not a scheduled news like at 3 p.m. in the afternoon, the GDP of Germany would be released. Those are examples of scheduled news. But unscheduled news like war or something, those are unscheduled news. Or the effect of coronavirus, suddenly the stock market crashes, it would greatly affect also certain currencies. So this is the solution actually. We want to measure the spread in order to prevent the robot from trading at a very volatile market. So we have also fixed weekly goal, trail equity start, and trail equity buy. So profit management type, we could choose between trailing weekly goal and fixed weekly goal. So the fixed weekly goal is simply if you set it to 5%, when in a week you reach a profit of 5% already, it will stop trading for you. So the faster you get out of the market, the better. So the faster you get out of the market, the better, because you'll never know what will happen during Thursday, Friday. Especially Thursday, Friday, we don't want to trade during those days. So trailing weekly goal, it will secure your trail equity start profit. So this one I explained regarding fixed weekly goal. But if you choose trailing weekly goal, it will secure trail equity start profit. So it means that at a certain percentage that you set, it will start to trail. But the moment you have a drawdown less than the secured profit, it will cut the losses. So let's say for you not to be confused, let's have an example. If you have a 1K USD account and you set your fixed weekly goal by 5%, trail equity start by 2%, and the trail equity buy by 1%, then the moment your profit will reach 3% of your account, which is 30 USD, it will now start to trail by 1%. So, meaning at 3%, it will secure your 2%, and it will trail by 1% until it will reach 5% gain. So, it will now secure the 2% gain, which is 20 USD. Let's say you have reached 30 USD profit, but suddenly you got a drawdown of negative 10 USD. Then it will close the trades to secure the 20 USD profit. So, if the profit reaches 4%, it will secure the 3%, and so on and so forth until you reach the fixed weekly goal, which is 5%. So that's how trailing weekly goal works. So I think it's really a good feature also, because you will be able to secure the profit at a certain point. But it's really up to you. But I suggest you use trailing equity start profit and trailing equity buy. So you use the trailing weekly goal option. So I think that's all. Those are the important features that you need to know regarding the software. If you are confused, just play this video again and just look at the parts that you're really confused. Or you could message me in Facebook and ask me about the settings of the robot. Please also subscribe to my channel. I know you're watching right now in YouTube, so please subscribe so that you will be able to have some updates on my softwares. I'll also most likely give some more tutorials in the future. I suggest before going live, you try the software first on demo for at least 2 weeks or a month, for you to have a more background on trading, on how to use the software. So I think that's all for it. But let me give an advice also regarding trading. So actually, it's better to trade conservatively and just compound the profit. But my advice is you compound the profit, you get the capital. So the first few months, you need to aim to double your money the first few months. And when let's say if you already gained 50%, get the profit first, or get the capital first. So let's say in 3-4 months you have 1,000 USD profit of your 2K USD, then you get the 1K USD until you get the whole capital. And the 2K USD, you could now start trading it and compounding it. So let me give you an example of compound interest. Compound interest is basically interest gained the interest of the initial capital also gain interest in the next month. So if you have 2,000 USD and you only aim per month of 10% of the amount, in 12 in let's say in 5 years, let's say 1 year, in 1 year actually that account would grow to 6,276.86. In 2 years, it could grow as much as 19,699. In 3 years, it could grow as much as 61,825.36 USD. This is the thing that I want to show you. You must trade conservatively. We are in it in the long run. Anyway, you don't have any monthly dues with the software. You could experiment on it. You could play safe with it. Just use conservative settings and just compound the profit. So for the suggested settings, you could contact me, or maybe I'll be making another video for suggested settings of this software. But I hope you enjoy using the software, and I'm not actually promising just gains on the software. You could have losses also, because each software, each strategy have weaknesses, and cost averaging software actually like this, the weakness is spikes, really large spikes, and trends that have less retracement. But the good thing about this software is it actually, if you try to look at it, it actually trades based from trend. So if you have a downtrend, your EMA 200 is looking like that, and the price here is going up and down, up and down, up and down, just below your EMA 200, it will always trade a sell based from the stochastic and RSI. And it will only put a hedge or a buy if the stochastic and the RSI, the stochastic and RSI is oversold, and the stochastic has a crossover. That's the only time that it will hedge. It's very sure on the hedging part. But on the trades that it usually put, it follows the trend. So when does the software what is the weakness of the software? If it breaks the support and resistance and have a really large spike, and it will retrace, very little retracement. Go up, very little retracement. But if it will retrace like that, it would be fine. It will be okay. So there is no such thing as a software that you just put and just trade for you. You have the task to monitor your account. So just if you're still not part of my GC, message me and I'll add you so that I could guide you in using the software. And another thing is, please subscribe to my YouTube channel. This is also one requirement for you to get the software. You need to subscribe to my YouTube channel. So the step for you to get the software, I haven't added it on my slide, but the step to getting is, first you need to register with FX Primus. You open an ECN account, leverage of 1:500. Then you subscribe to my YouTube YouTube channel so that you will see updates. Also like my page in Facebook. Follow my page, AI Traders Lounge. So my YouTube channel is also AI Traders Lounge. I'll be putting the links in the description part for you to open FX Primos. The link for FX Primos, the link for my YouTube. I mean, if you are in YouTube already, so you could just click the subscribe button. But I also add a link also for you to easily subscribe to my YouTube channel. Then I also put the link of my page in Facebook. So I think that's all, guys. Thank you for listening to this. Thank you for listening to this YouTube introduction and tutorial of my software, Avenger. I hope you enjoy it. I hope a lot of people would have gains out of this software. Thank you, guys, and have a good day.